like 500 minutes on our show. He's an icon, actually. He's been one of the original partners, actually, right?
Yeah, I think so.
From the very start.
Yeah, we had him as a partner even before the Legal Minute was a thing.
Yeah. Yeah, that's amazing. Well, good morning, folks. Mike Overson here, Illuminate Home Loans. You are listening to Minnesota Home Talk. We are live every Saturday from 7 a.m. to 8 a.m. Here, live from a studio that sits in half St. Paul and half of Minneapolis. Actually, this building does split the line between the cities there, so it's kind of an interesting fact. But what do we talk about? What do we talk about every weekend? We talk about mortgages. We talk about real estate. We're going to talk about some credit repair and business credit this morning, and we're going to have a couple giveaways this morning as well. So, in order to qualify for one of our giveaways, you can call in with a question. The call-in number is 651-647-2910. Again, 651-647-2910. Or you can text in. You can text your question to 612-202-8321. Again, 612-202-8321. Both ways will get you in the chance to win one of our giveaways. And what are we giving away today? Number one, we are going to be giving away 4 tickets to the T-Wolves game. So it's going to be kind of your choice of a T-Wolves game coming up here in the near future. We're going to give away 4 tickets to that T-Wolves game. And then we're also going to, a little bit later in the show actually here, we're going to talk about our other giveaway here. We're actually going to be giving away an initial onboarding fee for the business credit program here that Credit Life and Jared Havens are offering. We're going to talk about more later in the show about what that is, how it runs, who can benefit from it, all that fun stuff there. So again, phone lines open, 651-647-2910. And the text line is 612-202-8321. Got lots to talk about today. In studio with me is Jared Havens from Credit Life. No stranger to the show.
Nope.
You like getting up early on Saturday?
Yes, I do. Every time I'm invited, Jason texts me. I said, "I'll be there."
Yep, that's amazing. It's one of those things where no one wants to get up early on a Saturday, but once you do it and you come in, doing the show is fun.
Yeah, it's really fun. You feel good. Getting up early, you get the start to the day. You feel good afterwards.
Right, yeah. Get an early start. You feel like you're going to get something done. You can end your day a little bit early, have some fun at nighttime. I think we're going to go to Monster Trucks. Actually, I just brought that up to you.
Yep, that sounds really fun.
Might hit the old Monster Jam at the U.S. Bank Stadium tonight. So Jared, why don't you tell a little about yourself? So Jared Havens, Credit Life, you guys are located in Burnsville,
yep.
Right? Why don't you explain a little bit to listeners here what you guys do?
Yeah, so Credit Life, I'm the CEO of Credit Life. A lot of times when I'm introducing myself, I label myself as a financial freedom strategist. And the reason being is that the services and programs that we provide to people really ranges on the personal credit side and financial wellness side. So we help a lot of people looking to improve their credit, strengthen their credit profile for lending, right? A lot of times for mortgage. Mm-hmm. They want to get approved for mortgage. We've expanded on that as well. We've been helping a ton of people who have been pre-approved for a mortgage, but they want to strengthen that mortgage, right? They want to get a better type mortgage product. They want to be able to compete in this market. So a lot of people, maybe they're sitting at an FHA pre-approval, right? Mm-hmm. Hey, let's get you from 640 to 680, 700, 720 plus type program, just because it saves them a ton of money. They get significantly more buying power. And then once again, in this market, they're going to be able to compete more effectively, knowing that they have a stronger offer. And so we have programs around that. And then on our business side, we are really excited about this. We've been helping business owners for years. What we've done is we've completely revamped that program. I'm really, really excited to launch this because we have an initiative that we want to work with as many small businesses as possible. We want to help small businesses build back. We want to help them build back better, because we know a lot of people have been impacted due to COVID, all the different things going on in our world today. Businesses have been impacted greatly. Mm-hmm. We felt it too. We've been through it. And so with our knowledge of credit, personal credit, business financing, we've put together a program to assist someone exactly how to navigate those waters, teach them exactly how to build business credit in an easy way that they can follow. And then on top of that, we completely assist them in the financing aspect. in all different facets. And so really excited about that. We have a lot of clients that are just absolutely blown away that we were working in our old platform. We've completely revamped it, moved them over, and they are just absolutely blown away. And it's the part that I love about it is the better we inform them up front, they can apply with confidence, because a significant portion of people that apply for business loans are denied.
Yeah, you're saying that before the show. I mean,
Yeah.
it's like 90% or something.
80 to 90% of all business loan applications and vendor lines of credit are denied. And so we have all that information up front.
Show too that business credit works completely differently than like a personal credit.
Very
right?
much.
And however you're scored is different. The information, the equation, the algorithm, whatever they use is different. You want to talk a little bit about that?
Oh, definitely. So, all the listeners out there, it's very important to understand that on a personal side, you have Experian, TransUnion, Equifax, the three big major credit bureaus, right? And what they do, they're constantly taking in data, and they attach that to your personal profile. They sell that for a fee. They're for-profit businesses. So if you go and apply for, let's say, a mortgage, right, with our boy here, Mike,
Yep.
You're pulling credit, right? And
Yep.
there's a fee for that. It costs money to pull that data, and then you're running the FICO algorithm for the score to make lending decisions. Well, on a business side, you have Dun & Bradstreet. That's the main player. And so they're also pulling data, but what's really unique about Dun & Bradstreet is it's not as sophisticated, I'd say, as the major three bureaus, just because, based on how you filed, let's say your state filings, maybe you did an application, your address changed, but you haven't updated that yet. There's a lot of variables that can happen.
Okay.
Where you may end up having multiple profiles created through Dun & Bradstreet for the same business. So there's a lot of foundational work there you want to kind of check on to make sure it's tight, but it's very similar to when it comes to data. So Dun & Bradstreet, they're pulling that data, right? They once again sell that for a fee for lending purposes.
And that data that they're pulling in, like on a personal credit report, the data that gets pulled in is, hey, here's the limit on this credit card. Here's the balance you have on this credit card. Here's your payment history on that credit card. Is it similar type of data on the business side of things?
It's very much driven on payment terms. So net 30, net 60, net 90. So what's nice about business credit, once you establish and have business credit, you have something that's actually reporting to Dun & Bradstreet. It's all about payment history. That's the way I look at it. Hey, do you got it? Are you paying on it? How much? That's what's reporting. So it's actually really important. The more that you can build, the ease of access becomes better for you when it comes to new financing, because let's say you have vendor lines of credit. Hey, I'm a investor, real estate investor, and I got a line of credit through Sherwin that's reporting. I got Home Depot that's reporting. I have a line of credit here that's reporting. Well, that's all now funneling up. And once again, you want to confirm that it actually is reporting. Not all reports, so you got to confirm that up front.
Okay.
We vetted all that with our program. Whatever you get does report. But the more you have in those payment terms, the quicker you pay, the more your business credit score starts going up. So it's literally that simple. Do you have it? Are you using it? Are you paying it? And how quickly? And then the more you have, once again, the quicker that score goes up.
Interesting. So let's say SBA loans. If you get an SBA loan, is that something that would report then on a business credit
Yes.
report? Because
Yes.
SBA loans don't report on a personal credit report,
Exactly.
to my knowledge, right? But they would. That would be something that would show up on a business side.
It would. And what's unique about SBA is being that it's government backed, that is where personal credit comes into play more. So essentially what happens is, let's say, I'm a business owner. I'm starting to build my business credit. I got some vendor lines of credit going. I have a line of credit through my bank that reports. I got these things going. Well, what happens is over time, as you're building up that DNB, right, your Paydex score, well, then you can start obtaining financing specifically through your entity. And then over time, you can separate your personal from your business. So you no longer have to have them pull on your personal to apply.
Oh, nice.
SBA, they're going to pull on your personal. A part of their qualification process, for the most part, they are going to be looking at personal. They have certain personal credit score requirements. So that's something that if we're looking at, now the thing is, they have great rates, very, very nice rates, especially right now with the CARES Act and all the different things going on. So there is a lot of great opportunity there. But once again, what we would do in that situation is we'd analyze, hey, what are we looking to accomplish? What's the timeline? Let's see what needs to happen on personal side and a business side to meet the qualifications in advance before we even go and apply.
Nice.
Yeah. Because if you think about it, if you yourself, if you wanted to go and apply for a loan right now for your business, what would be the step that you take?
I wouldn't even know. You'd probably just go to your local bank, right? And be like, hey, I'm going to open this business and I need some money to do it. Can you give me some money?
That's exactly how it happens. I mean, that is literally how it operates. You're a business owner and that's what you would think you would go. That's the issue, I would say. Right there, that's the issue, because there are so many underlying criteria, requirements that need to be met.
Yeah.
When you go and apply, if you don't meet those and you have no idea what they are, you're just flat out going to be denied. And a lot of them are simple. Like for instance, let's say, once again, I like to bring up real estate. We work with a lot of agents, right? And a lot of investors, all different types of industries. But I feel this happens a lot, especially nowadays. We operate on our cell phones, right? Mm-hmm. Thing is, when you apply for a business loan, you don't want to be putting your cell phone on there. They run a scan that they identify that business number is tied to residential or cell phone. That itself could lead to a denial. You need to have a business line that needs to show up in the 411 directory.
Now, can that business line be also a cell phone line, but just not registered under your personal name?
Basically, what you'd have to do there, what I advise our clients is we open up a lot of times a voice over IP type service, like Ring Central. There's a lot of them out there.
Yeah.
Have that forward to your cell phone. People call in.
Yeah.
That does report now to the 411, and it meets all the FCC requirements. So when you apply for a business loan or vendor line, and if that's part of the criteria, when they run that scan, it's going to show up, boom, you meet that requirement. So things like that, it sounds so simple, right?
Right.
But if you didn't know that, you could be missing out on all these things. And
Right.
so that's a big part of our program too, is like, hey, let's make sure we meet these requirements in advance so you can apply with confidence.
Yeah.
Hey, speaking of voice over IP lines, they can call ours.
Yes,
at
indeed.
651-647-2910 if you've got a question, credit related, housing related, loans, how to set up this whole thing, where to start, call in 651-647-2910. We use Telos here, by the way.
Yeah. Oh, I love it. There we go. Exactly.
Telos. So it's really about knowing the rules of the game, right?
Yes.
So what's that goofy game they play overseas? Is it cricket, where you throw the pitch is where it has to like hit the ground before you swing at it, and something happens, and you go do that. It's like, if you're going to go play that game, right? You're going to step in there. You don't read the rule book or nothing. You're just going to go in there and play in that game. How are you going to play it? Because you don't know the rules. You're
going to be fumbling around, like trying to keep up. Like, wait a minute, what's going on?
Yeah, which way do I run? You know what I mean? All that stuff. It's like, this is the same thing. This gives you the opportunity to know the rules of the game first going in there, so you can have a fighting chance at actually, quote unquote, winning that game.
Exactly. That's exactly what it is. And so that's why I get so excited. And yes, I would love people to call in. I'd love to have anyone. If you have questions on personal credit, business credit, if you're a business owner, if you're not a business owner, just have questions, maybe you want to start a business. A lot of people right now, due to COVID, all the different things, remote work, have found that, hey, you know what? Maybe I can do this. I want to start a business. I'd love to hear any questions.
I'd be curious to see how many home side businesses opened up from COVID. Because if you're not going to go into an office, right, and then you work from home, we all know pretty much when you work from home, you put in probably about half the time that you would if you actually go into the office. So what are you doing at the other half of the time?
Yep.
I'd imagine there's a lot of just side businesses that kind of came about with this, with COVID and stuff, and people staying more at home. Now maybe that took off. Maybe you want to expand on that a little bit.
Yeah, it's so funny you brought that up. I don't have the exact statistic right now, but the applications 100% increased.
Oh, really?
Yes. There is a significant increase in home-based businesses and applications for LLCs and all these different filings. And so, to me, it's like, the way I look at it is, for us, at Credit Life, during that whole time, yes, we went fully remote, the shutdown afterwards. Just recently, we had a little bit of a breakout of COVID, so we had everyone go remote for a while to help mitigate the sickness, right? These are just things that you have to do now as a business. You want to be there for your team. You want to promote, healthy lifestyle. You want to be there for them, but you got to continue to operate, of course, right? So There's so many things. But, when I look at it, and what I feel is that a lot of people, when they were working from home or remote, found that I don't necessarily, think that maybe not all worked, maybe some worked half time, but a lot of times they found that it was easy access, right? Jump in and work, take a break, jump in and work, take a break, jump in and work. They could work in the evening, morning, you know what I mean, afternoon. And so then because of that, they found, hey, I do have gaps in time. I'm already home. Well, what else can I do here? You know, there's so much opportunity online, especially with Zoom. Zoom just blew up.
Right.
I mean, absolutely blew up. So a lot of times, you know, there's coaching opportunities through Zoom. There's all sorts of stuff that you can be doing, you know, to start a business or operating a business through these technologies. And so that's what I feel happened. And on top of that, you know, there was a lot of businesses, you know, that had to let people go during that time, you know what I mean, as well. So a lot of people had to really kind of pivot and make decisions, and they realized, hey, you know what? I could start a business. You know, on top of that too, you know, I don't know how much you guys follow like Tony Robbins and all that, and Russell Brunson with ClickFunnels. I love to follow these figures. They have been putting out ever since COVID hit absolutely amazing content geared towards people on starting a business in the coaching arena. It's one of the fastest growing industries is coaching. And so many people are running into it, right? Jumping into it.
Yeah.
So it just shows you there's a lot of cool stuff happening right now. And excuse me. And then once again, it's like, I look at that as an opportunity. Like I want to empower people to achieve their goals, right? Whatever that is. And so if we can do that through financial wellness and jump in there and assist, once again, you know the rules to the game. You have a much higher probability of winning.
Right. Yeah, we got a couple giveaways. We already talked about the T-Wolves tickets. We're giving away T-Wolves tickets to one of the best questions of the morning here. You can call in or text in. But then, Jared, you're also going to have a giveaway too. Why don't you talk about what you're giving away for one of the best callers or best questions of the morning? Yeah,
so if we have anyone out there that has a business, want to start a business, you know, we have a part of our program. We do an initial evaluation with one of our business credit experts. And what we do is it's a 4-step process. We sit down with you or virtually. We figure out exactly, hey, what's going on? Let's gather your data, the foundation. We have to understand your business, what are your wants, all the different things, map that out. Then from there, we run internally what we just call an internal scanner analysis. And based on that data that we pull in that conversation, we can identify right away what are the initial steps you need to do to build business credit right now. Is there any foundational tweaks that need to be made? And what type of financing is available to you right now? Our network is nationwide, over 4,000 lenders. So we can look at all that up front. Typically, we charge $997 for that. I'm willing right now, today, anyone that calls in, great question, we'd give that away at no cost, you know, as a surprise or like a reward or whatever you call it, right? As a giveaway, promotion, you know, just because it's going to cost you nothing. And the benefit of that could be absolutely amazing for your business.
So giving away one initial onboarding fee worth $997 this morning to anyone who's looking to build business credit.
And look at financing.
Both. With you guys. Perfect. So 2 giveaways again this morning. We're going to give away 4 tickets to a Timberwolves game. And then the initial onboarding fee is also going to be given away here by Credit Life and Jared Havens. You can call in with your questions this morning, 651-647-2910. That is the call-in number. And you can also text in your question as well to 612-202-8321. All right, Evan.
Yeah.
You got those hot... You got a... Oh, what's the question? Oh, you got a fire extinguisher?
You have a fire extinguisher?
Evan, do you got a fire extinguisher?
It's feeling kind of hot in here.
How long have we been doing this? And have I ever had a fire extinguisher?
No. We've been doing it for a long time. Words are hard for me. And no, you've never had a fire extinguisher. But I'm still going to ask because you know why, Jared? Because we got some hot listings.
Yeah, I was going to say, we got some hot listings. I love this part of the show.
All right, so listing number 1 here. We got a lot. Sitting in Savage. This one's at 14649 Sumter Avenue South in Savage. This is a 0.64 acre lot. Sitting in, I'm not exactly sure which neighborhood this is. It's off of 13 and south a little bit in Savage there. Again, 14649 Sumter Avenue in Savage, and this one is currently listed for $110,000. Going to the next listing here, we have 146XX Sumter Avenue South in Savage. This is a Pebble Creek custom home that you see here. This is my favorite floor plan of Pebble Creek's. I've been inside this one. It is amazing. You can see the finishing stuff in there. This is the very first one that they made where the staircase going down to the second level is actually behind the fireplace
Oh, yes.
on
I
the
love
main
that.
level. So you have your kitchen, you got your dining room off to the side, you got your living room there, and then the staircase is actually behind the living room and the fireplace that goes down
It's
to the
so
next
cool.
level. It's super cool. Again, it's my favorite model there that Pebble Creek has built. This one is a 4-bedroom, 3-bath, 3-car garage, 2,400 finished square feet above ground, and you can finish the entire lower level as well. Again, this one is at 146 XX Sumter Avenue South in Savage, and it's listed at $995. Going down to Dundas, Minnesota, we have a big piece of land down there, 130.6 acres of land there in Dundas, 1736 Millersburg Boulevard West in Dundas. Again, 130.6 acres. This one is basically right off of 35 and the Dundas exit. This one is listed for $5.2 million. And again, it's 1736 Millersburg Boulevard West in Dundas. Going to Pequot Lakes, we have a very unique listing here at 4572 Main Street in Pequot Lakes, Minnesota. This one's listed at $125,000. This is an old church that was converted. You could use it for residential. You can use it for business or commercial uses. Several different opportunities that come up with this one here. The building square footage here is 2,900, so you got some good square footage there as well. This one is listed at $125,000. Again, it's 4572 Main Street in Pequot Lakes. Going back to Prior Lake here, we have 16080 Sims Court Southeast in Prior Lake. The house you see there is a previous home that Pebble Creek has built that would fit on this lot, so you could build something like that if you wanted to. This particular house that you see there, it's a 5-bedroom, 5-bath, 3-car garage home. It's got almost 3,000 square feet finished above ground, and you still have the basement you can finish off below it. The lot size on this one is 0.64 acres, so you got a nice big lot here as well to build on. This one again is 16080 Sims Court Southeast in Prior Lake, and this one is listed at $950,000. We have some lots available in Sims Court there as well. The address here is 16094 Sims Court Southeast, Prior Lake. So there are lots available on this one. It is a cul-de-sac development here. It's 9 total lots. Every single lot is 0.64 acres or bigger.
And it's backed right up to a nature preserve.
Yeah. So you're not going to have any neighbors behind you. This is actually right across the street from Twin Oaks and Hidden Oaks.
That's what I was
middle
going to
schools.
ask. I grew up in that area.
Yeah.
That's
so
really
it's a
cool.
super cool location. They
Yeah,
can
it really
literally
is.
walk to middle school, go right across the street, and then you have nature preserve and 0.64 acre lots
Wow.
in this entire development. And there's only 9 lots there too, so you got a nice little cul-de-sac neighborhood there, and some pretty good privacy too. So this particular lot here at 16094 Sims Court Southeast in Prior Lake, this one's listed at $165,000, and I know they got a few lots available left in that development. Going to Evan's favorite listing, which is down in Red Wing, Minnesota.
Oh, I've been waiting for this one too.
Dude,
This
Jared
morning.
likes this one too. So it's a very unique, again, listing here. Pretty much unseen about anywhere in Minnesota except for right here.
Yeah, exactly.
This one is 27858 Greens Point Road in Red Wing. This one is listed for $2 million. The house is 3-bedroom, 2-bath, 4-car garage, 1,174 above ground square footage. The amazing thing with this property is the lot itself. The house is very unique too, as you can see, but the lot itself is pretty amazing. So you got 1.0 acres right on Lake Pepin. You got 405 feet of sandy lakeshore. That is probably about the most sand I've ever seen in Minnesota in one
Yeah.
spot before. I mean, look at that entire corner, that entire horn there that you have is all sand wrapping all around it, and you got 405 feet of lakeshore of that sand.
Do
That's
you
just
like to
gorgeous.
build sandcastles? This is the property for you.
Right? And the views on here are great. I mean, this house that's on there is a 3-story house. So you go to that top level, the views you have of Lake Pepin in your lot there, pretty spectacular. So again, this one is at 27858 Greens Point Road in Red Wing, Minnesota, listed at $2 million. Again, 405 feet of sandy lakeshore right there on Lake Pepin. And the last hot listing here, Docks Harbor is for sale up on Lake Mille Lacs on the north side of Mille Lacs. This is at 39629 State Highway 18 in Aiken, Minnesota. Currently listed at $2.5 million. You have RV spots. You have some dock spots there. Evan, do you actually have the numbers on those?
I think I can do it off the top of my head. I think it's 32 RVs,
Yep.
and it currently has 16 dock spots with room for expansion.
Yep, and I think it's got 4 buildings on there. So you got the main lodge, and then you got 3 other buildings that are on there. It's a really cool property. Business. It's a resort that's already set up and ready to go. So it is turnkey there.
Yeah, this is the, if you want to be running a resort and you've been wondering, how to get into it, this is it.
This is it, turnkey.
Yep.
They'll teach you everything you need to know. This is how we did this, and you can get in there and you can hit the ground running. You don't have to build anything up. It's ready to go.
Great opportunity.
Yep. So this one is at 39629 State Highway 18 in Aiken, Minnesota. Again, it's Docks Harbor, and this one is listed at $2.5 million. For more information on any of these listings or any listings currently on the MLS, you can feel free to reach out to us at minnesotahometalk.com. You can go to our page there. You can see right on the screen here. You can connect directly with Jason. You can connect directly with me. You can connect directly with Jared Havens and Evan.
Yep. It's all right there in one spot.
Yep.
And all the rest of our preferred partners. And we have the best of the best as far as partners go. So if you have any sort of need dealing with mortgages, real estate, credit, we have a guy. So if you need a landscaper, we got a landscaper. If you need an insurance agent, we obviously have Evan here with Paragon Insurance Group.
That's right.
Formerly known as Simplified Insurance Planners.
Currently still known as that on the Minnesota Home Talk website. We'll get that updated soon.
Yeah, we'll get that updated.
What did we say last time I was on with Jason? We called you the, was it the insurance wizard?
The insurance wizard. That sounds about right.
I think we ended on that.
Something like that.
I really liked it.
Yeah.
Yeah.
Yeah. We should actually play Stump the Insurance Guy.
Yeah, that would be really fun.
That's a fun game.
I've never been stumped about anything in my whole life.
Oh, now I've heard it all. You heard it, folks.
Mike, I
challenge-
literally know everything in the entire universe.
The challenge has been placed.
Yes, it has.
We're going to give away maybe another set of tickets to whoever
Yeah.
can call in with the toughest insurance
Let's
question and
stump it.
stump Evan. I want to hear Evan say, you know what? I do not know. I'm going to have to get back to you on that.
The problem with that giveaway isn't the idea of stumping me. It's that sounds like the most boringest question possible because we're getting into abstruse, contract. On the 48th page of my policy, it says the non-delegation doctrine applies to claims filed in the new moon, and pass.
So if I have a rabid squirrel bite a neighbor kid that's on my property, am I covered by that?
Oh my goodness.
Oh, I'd love
That
to
actually
hear.
could be really fun.
I love to hear the very unique questions that would come through there. Phone lines are open, 651-647-2910. You want to play Stump the Insurance Guy? We would love to have you call in with a crazy insurance question here so we can watch Evan sweat a little bit. Again, that number is 651-647-2910. You can also text in your questions, and that also gets you in the running for our giveaways, which is 4 Timberwolves tickets to an upcoming Timberwolves game. And then also we're Jared Havens with Credit Life is going to waive their business credit initial onboarding fee worth $9.97 for one caller or texter this morning as well. So you can text in your questions to 612-202-8321. All right. Evan.
Yeah.
You got any riveting insurance stuff to talk about today? Do you do any business insurance stuff at all?
I do, but mostly I focus on personal lines.
Does Paragon
does our main business is business insurance. That's how Paragon got started. We have 8 agents that focus on various things, and I would say that our book of business is right now 70% business insurance, maybe more.
So you guys are very well-versed in the business sector then.
Medium-sized businesses and large events seem to be our bread and butter. But as far as like what I personally do, I'm almost entirely oriented around personal lines these days. I do know about business insurance. It just, with our partnership with Luminate, most of what I'm doing every day is getting those things over the goal line to get loans done. So.
Right. Yep. Jared, here's a fun
great,
fact.
though.
Here's a fun fact, a little question for you. So Paragon has done the insurance for a very big national event previously. You want to guess what type of event they've done the insurance on? It's a yearly event that
State
happens. Good guess. It's not the state fair, but that's a good guess.
Another annual event.
It does revolve around sports.
Oh, was it the Super Bowl?
Yeah.
You better believe it.
Oh,
They insured
wow.
the Super Bowl.
That's
Yeah.
amazing.
Just think of how many
We did the
different...
Final Four as well.
You did?
Yeah.
Nice.
Yeah.
I
That's
didn't know. I didn't know
amazing.
the Final Four. I knew the Super Bowl thing that they insured the Super Bowl. I mean, it's crazy to me about all the moving parts of the Super Bowl, right? Because
Yep.
you have, I mean,
You know, as far as events go, it's actually probably something that's more straightforward because you've got one contained location, you've got a very specific duration, and you know the amount of attendees. Those things really, really kind of narrow things down.
And there's probably like a list of categories of things that they know they need to protect themselves from on a risk mitigation standpoint.
Right, exactly. And, you know, obviously there's a lot of moving parts to any of this kind of stuff. But
Yeah.
the state fair would be a much more complex question because how many people are actually going to show up?
Yeah.
They're exposed to the weather.
Yeah.
What is that going to mean? All those kinds of rating factors and so on.
Indoor, outdoor, animals,
Exactly.
rabbit squirrels.
rabbits, squirrels,
Whereas with
everywhere.
you know, an event that's at like U.S. Bank Stadium and so on, you have a very, very kind of locked down and controlled environment.
Yeah.
So, you know, as far as events go, not that complicated. It's just I wasn't privy to those negotiations, but my inclination would be that's a client that you have to work very closely with in order to make things happen. So,
I would imagine so. Yeah. Interesting. Phone lines are open 651-647-2910. We still have those giveaways this morning, which is 4 T-Wolves tickets. And then waiving initial onboarding fee for the business credit program that Jared Havens and Credit Life are offering now here locally in Birdsville. Again, the call-in number is 651-647-2910. And the text line is 612-202-8321. All right. Let's talk a little bit about personal credit stuff.
Oh yeah. Let's
Okay?
do it.
So obviously I'm in the mortgages.
Yep.
Credit is a huge thing in mortgages. It's really huge in your personal life in general.
Yep.
Because credit affects obviously interest rates for mortgages, auto loans, personal lines of credit.
Yep.
It also affects employment,
Yep.
right? How many employers now pull credit? 90%?
A significant amount.
80%? I mean, do you have a stat?
I do
you happen to
not,
know?
but I know it's. I would say anyone that's like medium size and up, especially if like you're a medium sized company, large company, you know, you have HR, and even like smaller based ones that you know bring in a third party HR company, like you know we use Oasis for instance.
Okay, yeah.
A lot of that's built into the policy now for new hires is pulling credit.
Yeah. And so you have all these different moving factors. A credit literally affects everything. And so the better you are on your credit profile and your credit score, the more financial wellness you're going to have.
Yep.
Right. And so let's talk about some, you know, maybe some of the common mistakes that people make on their credit. So I'll bring one up example. Okay.
Let's do it.
So someone goes, you know what? I got 3 credit cards. I'm going to go pay them all off and close them all up. So then I can't get into this credit card mess, right? And I should have really good credit because all my credit cards are going to be paid and they're going to be closed.
That's a big no-no.
Right?
Yeah.
Wrong. Like,
You know, I was
where's
going to
that
say, you know, one unique thing is that and I was just reviewing this last night. Actually, I was pulling up the mortgage data analysis, and I'm looking at all the different types of mortgages that originated based on location, demographic, all the different stuff. And you know, the one thing I found is that Minnesota, once again, falls under one of the top states to have the highest median credit score.
Oh, nice.
Once again. And, you know, I would say what you brought up there happens in a lot of more conservative type states because I feel that there's a certain type of thought process in how you're raised is my assumption on it, where it's like, hey, I want to show that I'm responsible. Cash is king, right? Only buy what you can afford, right? These are like some things that are instilled here, especially in Minnesota, I'd say.
Yep.
And so I can totally understand the thought process behind someone going, you know what? I want to buy a house. I have these credit cards here. I'm going to pay them off and show I don't even need these. I can afford this mortgage with ease.
Right.
I don't need these credit cards anymore. I'm buying a house.
Exactly. And so that I feel is a lot of times what happens. And the thing is, you have to understand that your credit score is all about data. They need data, they need activity data, and they want different types. So you want to show that you have active credit cards,
Yep.
but the key is you want to have them as low balances. You want them active, you want them reporting, but you want low balances, not zero and definitely not closed. Because when you close them like that, and you lose all that point opportunity now, significant drop in score. So your goal of improving and showing, hey, I can handle this mortgage, now you just went backwards because your risk appears higher, scores go down. You could be denied just for that.
Right. Yeah, it's crazy. And on the insurance side too, Evan, correct me if I'm wrong, but you guys pull credit on insurance side as well?
Yes and no. So there's a score that uses your credit as well as some other things to create one of the aspects of risk rating factors. It's technically not just a credit pull, it's a broader thing. But effectively speaking, yeah, your credit matters for your insurance rates. And it's not just for business insurance. It matters for your homeowners and it matters for your auto.
Yep, 100%. Yeah, and I believe, don't they, it's more of like a grade.
Yeah, exactly.
It's about grading it.
So every company has kind of different rules about it. They bracket the thing differently.
Yep.
So, your credit score, it's going to be a number. It's, I have a credit score of 680 or 742 or whatever. The insurance company distills it down into risk rating brackets. So they'll have like a score 1, score 2, score 3, score 4. Generally, it's 1 to 7. And that includes credit rating as well as some other nebulous factors. And that just kind of is a modifier on top of your previously existing rating factors. So if your credit is decent, it's kind of like how you kind of cap out. The difference between having a 750 and a 780 as far as interest rate is generally not going to be anything.
Yeah.
And it's the same thing with insurance. Once you get into a zone where the insurance company says your credit is good, then you're going to be in that top category.
Yep.
But once you start getting outside of that, that's where you get into
your premiums start going up.
Yeah, exactly. And the other thing too is, so insurance has to be available to everyone, unlike a loan. A bank can go, you have a credit rating of 580. We're just not going to give you this loan. You're going to have to go apply for some sort of other thing, right? You're not eligible for conventional financing or whatever. That's not an option for insurance. So the credit rating factors there, they have to go into zones that a bank wouldn't be comfortable with. And then there's another piece to it too, which is people with no credit score. Obviously, if you don't have a credit rating history at all, you're going to struggle to find a loan, but you have to be able to get insurance. So they assume a score, and generally it's like that midpoint, like the rank 3-ish. And that's where you get into these weird things where there's a really rapid fall off after that, because they go, well, we would have assumed that your score was decent, but since it's not, we really have to ramp things up now to compensate for that.
Yep.
Yeah, it's on the same thing on the loan side too. If we can do loans for people with no credit scores. There's different criteria. You got to have more down, and it's like you have all these other factors.
Got to
that
prove
go
the
into
income
place.
way out. Yeah,
that type of deal. But then what credit score do we use to run your rate on? Like, because a 620 credit score on a conventional loan and a 750 score on a conventional loan is a huge difference in interest rate. So it's like, well, what score do we use to run it? Well, they assume on the mortgage side of things, they just use the lowest qualifying score. So if it's a conventional loan, the lowest score you can have and qualify for conventional loan is 620. So now we use a 620 score to run your interest rate and stuff on.
That's why I get into a lot of healthy debates with people that apply certain things like the Dave Ramsey type concept, where you don't need credit, you don't need a score. Thing is, you pay more. And the reality is you're working on, and I believe in financial freedom, 100% I do. But most people, when they start entering into that type of concept, they have work to do, right? Mm-hmm. Well, why? They need to know how to leverage credit to pay less for things, which means you can get out of debt more quickly, and you can still maintain. There's many strategies to maintain a healthy credit score without having to take on that much risk, to kind of go against things. So it's like, The reality is that people need to know credit matters significantly. Do not ignore it. Like, you need to have it, period, if you want what you want.
Yep. No, so another very common thing that comes up is, I got this old collection. Like 3 years ago, I had this stupid, whatever, internet bill that didn't get paid and went to collections. I don't know what's hanging out there, and I've kind of just ignored it. Well, now I want to go buy a house, so I'm just going to go pay that thing off now because I don't want that hanging out, when I go to apply for this mortgage.
Yep.
What happens there?
Another no-no.
Right?
This is where we always talk about you have to throw common sense out the window sometimes,
Yeah.
Major issues there. One is that if you have to think about it like this. Like, if you actually, pull and read your credit report, you're going to notice, like, under a collection, one, there's no, like, payment terms below it. Doesn't show a history. It's a derogatory debt. It's negative. It's only bad at that point.
Yep.
And what you'll look at is, like, the last activity date. Well, a lot of times, if time has gone by, like you just said, a few years ago, right, the utility bill, that was some sort of dispute, and I returned my equipment, and they didn't credit me, right? It's usually like an emotional thing that happened, like an event.
Yep.
Thing is, if you go and pay that, now what's happening is you are refreshing the life of that. You're bringing the activity of that from 3 years ago now to today. And in most cases, almost all, when you pay off a collection, does not mean it's removed. It gets updated to zero balance. Now you have refreshed activity on a derogatory debt. It dings your score. Scores go down. So, like, someone working with you, let's say they have like 676 middle score, right? Mm-hmm. And they're just, I want to bump it up just a little bit more, better pricing, all these things. And they're thinking common sense. I'm just going to pay that. That might drop them down to, 650, 640.
Yeah.
And so now we've gone completely backwards, so that's definitely a no-no there. I would say that's a big one. And a lot of people don't realize too, it's like there's so many things that you can do in advance. Like, there's investigation strategies where you could get that removed, then settle. That's a big part of our model is, hey, if we have any sort of collections on there, let's investigate, challenge. There's so many different ways you can challenge reporting history in a way that if they're unable to verify, it's not about validating the debts per se, or, hey, this debt's real or not. It's about the accuracy of the data. That's the key. If we can get that removed first, then you go and settle. What's nice about that, scores go up, profile improves. You've settled that, so it's not going to come back and bite you. You settle for less than full bounce. You save money. Booyah.
Yep.
That's the way to do it, right? But most people don't know that.
Yeah. And the problem with collections, too, is what you brought up is that let's say you make a full payment on that collection. You think that thing is now gone.
Yep.
Right?
Naturally, most people think that.
Right.
I paid it off in full. It's gone. I took care of it.
They said they will remove it. They said they will remove it if I just pay them in full. So I'm going to pay them in full now. So you go pay it and, make it updated to a zero balance, but it's still shown on your credit.
Mm-hmm. Exactly.
So there's strategies, again, to kind of settle for deletion type of thing.
Yep.
Knowing how to do that and what to do and what you need to get to protect yourself on the back end to make sure that it does get deleted.
Yep.
If you settle.
And that's what it's all about. Like, in our program, we've already vetted all this, right? So we're constantly in the loop of how these collection companies operate. They're all different, right? They have to abide by the laws, but they have certain operating procedures. Like, for instance, there's certain medical collection companies that part of their policy is you pay it, they'll remove it. It's part of their policy. Now, it might take up to 60 days after you pay it for it to finally remove, but we'll source that based on timeline. Hey, you know what? Let's go ahead and settle that. That should get removed. We'll monitor that for you. But the vast majority of collection companies cannot do payment for deletion. So that's, me calling saying, hey, if I pay this, will you delete it? Vast majority cannot do that. And so that's once again, like, let's vet that out. So if ones where we know there's a certain few, hey, you know what, this might make sense based on the profile, based on the timeline, based on your goal. Let's go ahead and settle that one out. Less than full balance, save money. We know it's going to get removed. These other ones, we'll use the strategy I talked about. Let's investigate. Let's challenge the information.
The data, yep.
Let's get it removed that way, then go and settle. Now the entire time our profile is improving, right? That's how we want to approach it holistically, as well as, strategic credit building, improving the strength of your profile, scores go up. Hey, how do I manage my debt correctly? All these different things that we're working on with our clients.
Yep. Yeah, because the other thing, too, is building credit. So not only getting rid of some of the negative stuff that might be in history, but, okay, so now if you get rid of that, but now how do we move forward? How do we build positive credit so that now your score doesn't just stay flatline? Now you actually gain points by doing that.
Yep.
So then you have to potentially open new credit accounts.
Yeah, I mean, I just talked about this Thursday evening. Every month we host multiple virtual workshops for clients, for anyone. I mean, we have a lot of them that are just for our clients. We have a ton that's open to the public for anyone to join. And last Thursday, I had our mortgage readiness workshop where I really go through and help them understand all these things in advance. So that, once again, my goal is to inform them. I want to increase their buying power. Then when they go to people like you, Mike, they're informed, their credit ready, their down payment ready, they're ready to rock, right? Because they know what's up now. So that's the whole purpose of that. But I explained to them and showed them in there. It's like, look, just because something's removed does not necessarily mean scores go up. That's another huge mistake out there that people don't know and don't talk about it.
Yeah.
Especially in my industry, in credit repair, as part of what we do. A lot of credit repair companies just focus on that one area, is repairing credit. Well, they don't explain how that really impacts scores. People just automatically assume that's a positive. Thing is, you could repair and remove things, but to your point, if I'm not building positive, building better credit, scores can still remain low. If I'm not managing my debt correctly, scores could still remain low. I mean, there's so many different variables. That's why for us, we have more of a holistic model where it's like, look, let's hone in on strategic credit building. To me, that's future buying power. The more we build it up, the better it is. The more buying power you have, the more opportunity. Let's learn how to manage debt. How do we manage debt in a way to improve scores, but really also financial responsibility, money mindset? How does this really work, right? Get them set up on a spending plan, all these different things. The beautiful thing is when we do that with our clients, the repair becomes the bonus, because now, yes, we're eliminating the negative. We're kind of lessening that weight, weighing it down.
Yep.
They're doing everything right over here. Scores jump up. But if they don't, scores will not go up more than likely. And so you're still at this battle, right?
Yep. Yeah. And we see it all the time.
Yep.
And a lot of times people will look at me and it's like, so I'll pull a credit report, I'm doing a pre-approval for a mortgage, and someone will be, hanging around a 660 or 670. It's like, well, what can I do to get my score up? And I'll be looking through there. Most of the time, it's if there's any sort of a quote unquote quick score deal, it's usually paying credit card balances
debt reduction,
down, right?
Yep. And
so I teach them how that works, and don't make your payment after your billing statement comes out. Make a payment before your billing statement comes out, so that the lower balance actually reports in your credit report, and all these tricks that we do. And a lot of times we'll be like, well, what if I'll just pay my auto loan off then, or now I'll pay this other installment debt off, I'll pay the student loan off, do all that stuff, that should raise my credit score, right? And I'm like, yeah, probably not.
Nope. That once again won't work very effectively.
Installment debt works different than credit card debt, and so it's like installment debt. Once you pay that off, that account's closed now. It doesn't
We're
stay
missing
open.
out on that payment history, and there's a term in FICO called rank order risk. Higher the loan balance, the more important it is. A lot of times, certain installment debts, auto loan, mortgage, student loan, their ranking is higher because that balance is typically higher. So you want positive payment history on an account like that. So like if you paid off early, and once again, for the purpose of improving credit scores right now, it's not going to help you.
Yeah.
You know what I mean? But what you said on the credit card side, yes, because that's a separate portion of the algorithm and how they calculate risk. Yeah, the management of that is very different. And so, in that case, you would want to reduce that and may have lower balances reporting.
And this is, of course, why you want to consult with these two fine gentlemen right here, because you might be in a position where paying off your auto puts you in a better buying position because your credit's strong enough that closing that account, that's fine. It's not going to rock the boat too much. Yeah, your credit score might go down a tiny bit, but it's going to free up some income as far as what you qualify for and so on. And so that's why it's good to take a look at this stuff before you start making moves and decisions based off of, well, if I pay off this credit card and close it and pay off this auto loan, I'm going to be in much better shape.
Yep.
And it's like, maybe you should call first.
Yeah. And a lot of people just know, like they know they're a good credit standing and this and that, and they're fine. A lot of people, if you're out there, if you're like, I'm going to be, applying for an auto loan or going to be applying for a mortgage coming up here soon, and you're just in the question mark, you're like, I think I'm okay. I think.
If you've never been through these processes before,
right?
Call and check first.
Yeah.
It's like call before you dig. Call before you get a loan.
Right?
Exactly. And also, too, what's beautiful about it is on both of our sides here, to talk with us doesn't cost anything. You know what I mean? You don't charge a fee. We don't charge a fee up front. Like, hey, talk to me costs money. We don't operate that on a personal level. So it's like, it's in your best interest to talk to an expert first so you can better understand what your options are. Because we know, one, understanding the mortgage process in advance is huge. You can look at it, on your side going, hey, like you brought up a great point. Maybe the credit is there, but if they do pay off, if they're able to, an auto loan, free up that monthly payment to improve debt to income ratio, more buying power there might make sense, right? But being able to evaluate that up front is so powerful. And then on our side, evaluations, we do evaluations with clients every single day that want to understand more at no cost. We do that for a reason. One, there's a ton of value to it. But for us, we need to evaluate what's your situation, what's your credit status, what are your goals, develop a plan, educate you on that plan, and then decide, hey, what's the best solution? Maybe it is one of our programs, maybe it's not. But at least then that person knows and has clarity instead of just being out there kind of like, oh, I'm just going to try this,
Right.
Because as we know, the everything associated to this costs a lot of money. I mean, you could literally, certain tweaks could save you thousands of dollars. So it's well worth the time investment to figure that out.
Yeah, literally just making your credit card payments on a different date can swing your score. I had one guy that swung his score 83 points because he had one open credit card. He charged everything for the month on that credit card. He waited for the statement balance, the balance statement to come out at the end of the cycle, and then he would make a full payment on it. So it was a $4,000 card. He'd show a $3,500 balance on it every single month after month, even though he paid it off in full. What was reported on his credit report was, hey, your last statement said there was $3,500 on it, so now there's $3,500 against a $4,000 credit card there. And so because he had limited credit, basically his entire score was run off that one credit card that he had. I said, look, do the same thing, but make your payment 3 days before the cycle ends. So that payment clears and your balance gets knocked down to zero. So the next month he did that. His score went up 83 points.
It's amazing. We coach a lot of business owners on that. Because a lot of people, operating their business, especially in the very beginning, they leverage their personal credit a lot. And a lot of times they're using credit cards for business expenses, business lunches, whatever it is, right? They're using their card for those reasons. And what you just said is so common. And without that knowledge, that's another struggle. I mean, being a business owner in itself, based on how you do your filings, can be a struggle for financing in itself. Right? 1099, business, all the different things. That's already a struggle. Then if you couple that with mismanagement, because of you just don't know on your credit because of the card, I mean, there's a lot against you. So the more you understand in advance, the more powerful it can be. It can work for you instead of against you.
Yeah, exactly.
Got a couple minutes left if you want to call in. Best question of the morning. We've got Timberwolves tickets to give away. 651-647-2910. That's 647-2910. Call in, give us a good question, and maybe you'll walk away with those tickets.
People are probably sleeping. They're trying to get prepared for tomorrow. That's what's going on.
Quite a few viewers on Facebook right now.
Woo-hoo,
so we had a text question that came in. It said, what's the largest improvement in FICO score you have seen within 1 month? So any of your clients that you've worked with, what would you say? And mine is the 83 points in 1 month type of deal. Literally, and all we did was change when the guy made his payment on his credit card. It was an quick, easy fix. It was one of those things where he filled out an app for me, which is free, right? So all this stuff you mentioned, all this initial stuff is free. It doesn't cost you anything. So I definitely encourage people to reach out to us because there's no cost. But I saw it, went through everything. It's like, boom, literally all you got to do is this one thing. And next thing you know, we pulled his credit a month later. It's up 83 points. So that's the largest I've seen.
Yeah, we've had over 100-point jumps with some clients. I don't want to put that up there as the standard right now, real quick. Yeah. But for someone like that, what the reason being was, one, very similar situation on the credit card management. So making that tweak was huge. And then we had some past derogatory, some collections, and effectively in one fell swoop working on it all at one time. It wasn't exactly 30 days, it was closer to 45 days, but we had an increase of over 100 points just because of those things. But they had the baseline, they had the profile to justify that, with that removal and repair and the tweak to do that. So it's very possible. That's what's so nice about it. It's like there's always a solution every single time. It's just what is that? What does it look like? How long is it going to be?
Yeah, that's
But it can be quick. That's a great thing.
It can be. You know, and it's just knowing the rules of the game. We did have one other text question that came in here. It's actually an insurance question for Evan.
Oh boy!
Woo-hoo, here we go.
Says Evan says, I have ice dams forming on my roof, and I'm working on trying to get them resolved. But if the damage is too great, is that something I can make a claim on?
Well, this comes down to a lot of different moving factors. Theoretically, yes, depending on the terms of your policy. And, of course, consult your insurance agent in order to determine whether your coverage applies or not. Ice dams are generally a sign of a maintenance issue, but they can also be a construction issue. And so basically the rule for insurance is, was it sudden and accidental? If it was sudden and accidental, it's probably covered. If it's something that's occurred over a long period of time, it's probably not covered. And so that's the line that you get into. Is that water damage from the last 5 seasons of ice dams? Or is it because you suddenly had this singular ice dam event and all of a sudden a bunch of water just came pouring in? That's going to be the delineation, generally speaking.
And so that seems like there could be lots of gray area.
Absolutely.
Right.
And that's why it's going to be important to consult your agent to say, well, on my policy with this company, how are they going to look at this?
Gotcha.
Because it's going to vary from policy to policy.
Yep.
Very
And
good.
that's it. We're done here.
That's it. This
Wait,
has
hold
been
on, let's
Minnesota
extend
Home
it
Tech.
another hour.
Yeah,
One
right.
more hour, right?
Yeah, we're gonna take over Todd's show next.
I mean, we could. Todd's not coming in. He's a repeat show today.
Oh yeah, we can take his hour, right? But stay tuned to Todd's show. So Todd's show is great. Todd
Yes, it
Rooker,
is.
Cover Your Assets is great next. So definitely stay tuned for that. We appreciate you listening here on the Saturday morning. This has been Minnesota Home Talk. We'll be back next week.